Carl Icahn? I can't even believe my eyes, folks, when I went on YouTube right now and I'm like, what? Carl Icahn's out of hiding? Billionaire Carl Icahn? Oh my goodness, I only got to watch the first few minutes of this so far and I was like, I need to go ahead and react to this. This is big, okay? If you're wondering, when does the stock market bottom? Okay, we need 4 things to happen. One was Tesla stock to fall. It's fallen. We needed Carl Icahn to come out of hiding. He's come out of hiding. We need 2 more things. Warren Buffett to come out of hiding and Apple stock to fall a whole lot more. Once we get that, baby, it's to the moon again. We're going to start making a lot of money again. A lot more houses coming, a lot more cars coming. It's going to be a lot of fun, okay? But we need those 2 last things, okay? This is shocking to me. I'm like, I haven't heard of Carl Icahn it's been a while, okay? The man's been in hiding somewhere. So he is going to get into his opinions on the market, what the Fed's doing, stocks. I'm sure a lot of different things in this. I'm looking very, very forward to this video here today. Hope you guys enjoy this as always. I appreciate each and every one of you that has subscribed to the channel. We are now 18,300 subscribers strong. Did I forget how to say that word? Holy smokes. I think I've probably said it so many times in my life that I don't even know how to pronunciate the word anymore at this point in time. Hope you guys enjoy this as always. Let's get into it.
Yeah, I think we have a real problem with the markets. I've been saying that.
Oh man, that's not a good way to start. Yeah, I think we got a real problem with the markets. Oh crap, man! Don't start it like that, Carl. Come on, man! Don't do us like this.
Steve, I've been saying that for about a couple of years now. You know, in articles and whatever. I keep things pretty well hedged, but I have a very big hedge on now. I think we have a major problem, and I can go into it more if you want me to. I mean, why we do.
Yeah, please, of course. Give me a few.
Carl, in all due respect, we just started the interview. Like, yeah, please go into it, man. Come on, man. Things are starting.
Like a few bullets on like what the specifics are that really, get.
I mean, look, to begin with, we're trapped with this inflation. Inflation is a terrible thing. It's what brings down hegemonies. And you look at things simplistically. I look at it just very simplistically. That's where, if you can do that and sort of understand the markets that way, you should be successful over a long period of time. And right now, there are real problems because inflation is a terrible thing. And once you have it, it's almost like being drug dependent, and it's very hard to get rid of it once it starts. I mean, I remember the 70s, but it takes down countries, it takes down hegemonies, and I think Powell is very right to do anything he can to stop this inflation that's coming on. And the real surprising thing is that you haven't had it before, because for the last years, we've been just printing up money and just giving it out. And one of the major problems is, I think,
before he gets into one of the major problems, he brought out a good point there. He's like, it takes down countries, right? And 100%. I mean, you're seeing some of these countries. I think I saw Turkey yesterday. I think I got a headline that their inflation rate is something like 85% or something like that. I mean, when you start talking about getting up to these crazy inflation rates that some of these countries have to go through, right? I mean, we think we got it bad in the U.S., right? It's like, it's nothing compared to some of these other countries. I mean, when you got to start talking about, you might have to start taking a shopping cart full of money just to buy some groceries at the store. It's getting a little out of hand, right? Nonetheless, and it is truth that it does take down countries. It takes down complete political parties in countries. It's a crazy thing. It's one of the craziest things that can ever happen, honestly, to a country. It's unbelievable the damage it can cause and the chaos that can ensue when you have ridiculous amounts of inflation.
Nobody's blamed them, but it's corporate America. It's the
so right there, I thought he was going to go the Fed. I thought he might go the government. He's blaming straight to corporate America. This is interesting. Let's get into this.
CEOs, rubber stamp boards, and the money has been very cheap. So they've been able to borrow money very cheaply. But instead of putting it back into production, they've taken that money, borrowed more and more, and bought stocks at very high valuations. And now it's time to pay the price of that. So you'll have more and more debt coming due or interest rates to pay at higher prices. And that is a problem as far as earnings are concerned. And aside from that,
before he gets to his next point, that's a great point he just made there. You know, I spoke about this on the main channel in a video today. I don't know if you guys know this or not, but Apple has spent just in less than the past, I think it's 9 years, Apple spent something like $500 billion plus on share repurchases, right? Think about what they could have done with $500 plus billion over the last 9 years, right? Is that really the best use of their capital over the last 9 years to spend $500 plus billion, including they've had to take out obviously immense amounts of debt over the years to fund that as well as deplete cash balances? Was that really the best use of money? Maybe it was, but it's kind of sad if that was the best use of money. Like think about that for a moment. Apple spent over $500 billion on buybacks. And that's really the best use of their money? That's just a sad state of things if that's really the best option, right? It's certainly an option, but the best option? I mean, that's kind of insane, right? And you think about the airlines and all those share buybacks they did, and then they had to be rescued, obviously, in Rona and countless other companies out there that would have went bankrupt if it wasn't for the Fed and the government bailing them out. And they spent all this money on buybacks and depleted their balance sheets of massive amounts of cash that could have got them through Rona without any government help. But they didn't have the type of cash balances because they spent so much on share buybacks over the years. So I do think Carl Icahn is making a very good point there.
Whole net worth, I would say median household net worth is really non-existent in this country. So half the households have no net worth. And the other half, except for the very top 10%, I think are very concerned about what's happening. And they're looking at their net worth, which is the market and their homes. And you have to be very concerned about that.
Yeah, Carl,
eventually,
I'm sorry.
go ahead.
Yeah, in this kind of high inflation environment, you've been through, many decades, ups and downs. How does this environment affect what you do and how you play the game right now?
You should have just let him keep talking, in my opinion. I don't think he should have interrupted there. Let Carl Icahn finish out that. That was getting good.
Well, we're very hedged. And as far as I'm concerned, short the S&P and short different companies. And what I look for are companies that have some hidden jewel. And that served our purposes. We find a company with hidden jewels that are either not well managed or the boards are rubber stamping too much debt or whatever. And we get it on those boards. And eventually, sometimes you have to replace the CEO. And a lot of these companies are doing well. So you take CVI, our refinery. Our refinery, I mean, it took years, but it's now actually functioning greatly because we have spent quite a bit of capital in it over the years. We had to save it from going bankrupt. The government, in their great wisdom, with ESG, made
$500 billion plus Apple spent over the last 9 years. I'm sorry, I'm coming back to this, okay? What could they have done with that $500 plus billion? Well, they could have built entire assembly line in the United States of America for a fraction of that cost, and had all iPhone production done inside the United States easily. They could have probably spent a good amount of money to have all their chips also made in the United States of America. With $500 plus billion, they could have done it. They could have done it easily. And now they're in a predicament that if the Chinese government wants to shut down the factories that make the iPhones, they can do that in a snap of fingers, which shuts down iPhone production and most of Apple's production like that overnight if they choose to. So now Apple's in a situation where he spent $500 plus billion on share buybacks. They could have built out all their production inside the United States, controlled every element of what goes into their products probably actually be commanding even higher margins nowadays and not even have to worry about the risk of like, oh, they're shutting down one of our factories or they're doing this, doing that. Think about that for a moment, right? So $500+ billion, you can do a lot of things with that outside of just, let's call it share repurchases. Carl Icahn brought up a good point.
Refineries, very difficult to make a profit. So a large number of small refineries went out of business. And I won't go into the details, but they penalize refineries and they tell them they don't want them. So unlike almost in any other industry where if you're doing well, you build more. If you're doing well in the widget business, you build more widget factories. You can't build another refinery. You take CVI, for instance. The refineries we have to replace would be, $10-12 billion, I believe. You can't put a number on it because you really can't build another one in this country. So you can't have that competitive element coming in. A lot of refineries went out of business. A lot of the large refineries, or the big companies, listened to the government telling you how terrible refineries were and stopped building them up. So today,
what he's actually talking about here is very important. Because if you're looking at the price of oil, if you're looking at, let's say, a gallon of gas, right? You go by a gas station, and I think most people still drive internal combustion engines, right? And for the folks that are fortunate enough to drive electric vehicles and a Tesla, like, congrats to you guys. But for most folks, you have to gas your car up, right? And so you go to these gas stations, and in some of these places, $4 or $5. I know here in Vegas, every time I go by a gas station, it's high fours, and a lot of times it's $5.05, $5.10 a gallon, something like that, right? And you're looking at that and you're like, how is the gas price this expensive when oil's under $100 a barrel? Like, it doesn't make sense, right? $80, $85, $90 a barrel. How are we paying $5 a gallon? Part of it is governments, and from the obviously the let's call it the big side, and from the state side, have obviously increased taxes a lot over the years. On top of that, the refineries are taking a great deal of that money. And so that's why gas prices are so expensive. It's not necessarily because the gas station's making bank off that. They're always going to make their, 10 to 20 cents usually, depending upon the gas station and what type of margin they like to make, right? So the gas station is usually going to make between 10 and 20 cents a gallon. Unless it's a really competitive market, they might make less than that. If it's a not a very competitive market, they could make 30 or 40 cents a gallon, essentially, right? And so keep that in mind. That's a lot of the money is going to refineries, and because the United States, we have obviously demonized the oil industry in a major, major way. Like, why would you build a refinery when you're seen as the enemy and do that type of capital investment? It's massive. He was mentioning $10 to $12 billion. That's insane.
Crack spread has widened tremendously. The diesel crack, for instance, has gone up as high as $75 or $80, and that just means it used to be, $20, $25. So obviously, our EBITDA has, for 3 quarters, has gone up to $800 million, I believe, or close to $1 billion. But then you can't really come in and say, well, these refineries, should pay more taxes or something, because in the bad times, I must have put $300-400 million in to save that refinery or that 2 refineries when a lot of refineries went out of business. So now you're backed into an energy problem for gasoline and diesel. And diesel is very important today. Diesel now is used in Europe to generate electricity, which will stop eventually. And from the point of view of ESG, you have something called bunker fuel that is really, really polluting the water as we speak. So diesel is used to replace that terrible fuel they used. And then our refinery, Wynnewood and Coffeyville, the 2 refineries, we're able to produce fertilizer or help to produce fertilizer. So we don't need, with fertilizer, you need ammonia. You need gas to make the ammonia, NH3. You need natural gas, except we're the only one in the country, and people don't understand this, that built this many years ago. We had the foresight to build it. I can't take credit for it, but it's there. And we were able to make it with a company called Petcoat. And so we don't need the natural gas to make the fertilizer. And we ended up owning a fertilizer plant, which is the factory's right next to our refinery, and it's really fascinating. And nobody even wanted that 7, 8 years ago, but we nourished it and we kept it going. We own 36% of it, and we own the control of it. And obviously today, fertilizer is the most necessary thing in the world if you think about it, especially if the Ukraine keeps going and they shut off these things. And we are the only one in the country that can make it without natural gas. So, I mean, we have all these little jewels at CVI. I'm just using one example of what we look for, and they're coming to fruition.
Yeah, and also, speaking of finding those gems, you just made a play. You bought a big stake of Crown Holdings. You just bought a big stake of aluminum can company today. Tell me really quick summary, what made you do that move?
Well, there too, you look for a couple of hidden jewels. I mean, it's in an industry that has natural growth because it's in an industry where you're getting rid of, slowly but surely, getting rid of plastic containers. So because of the environment again. And for some reason, the earnings of this company have not come to fruition. Their earnings are down. Well, a lot of companies' earnings are down, but I think one of the problems that corporations do, and there are many good CEOs and many good boards, but a lot of the problems are that they try to diversify, or they try to say, I'm going to take over a company because I got this company, and you're going to get synergies. The synergies are very hard to get. If you look back in history, Jack Welch was good enough to get synergies at GE, but then look what happened. So they went out and bought different companies. We think they should just get rid of it and stick to the can business. I think there's a lot of things that you can do in that company. They're not badly run, but I think that many of this, but this whole business of diversifying has hurt their earnings, hurt their multiple, and eventually that company should flourish just by the nature of the business they're in. So stock went down a lot, and we bought a fair amount of it. We're going to try to. I talked to the CEO today. We'd like representation on the board, as we always try to get. We may get it, we may not. We may have a proxy fight, we may not. We haven't decided yet. But that's relatively.
You see that move the stock made, 10% move just on the news that Carl Icahn bought into it. That's when these billionaires, when they make a purchase like that and the news comes out, obviously Warren Buffett might be a different level, but Carl Icahn, guys like Warren Buffett, those guys are such huge names that when they buy a stock and then the news breaks about it, the stock goes up 5, 10, 15% almost immediately.
We have a lot of companies at IEP. Right now, I just mentioned CBI because it sort of typifies what we do over the years to get the record we've had.
Yeah, speaking of record, I want to switch from industry to tech, and I went back 9 years, and I remember your first tweet you wrote, and that was back when you were in a proxy battle with a small computer company called Dell. This Twitter is great. I like it almost as much as I like Dell. And now you come full circle, because I've been hearing some rumors that, before the Elon Musk move, people were approaching you to maybe launch a proxy battle with Twitter before Musk came in. Are those rumors true?
Yeah, I was approached. I've been approached on different companies. I was approached. I looked at Twitter, and I loved it. I think it's a great platform. I think Elon Musk is the perfect one for that company. You don't have to be a genius to realize that he was going to finish that deal. He was up against lawsuits that he wouldn't have won in Delaware, in my opinion, the Chancery Court there. And so we bought a lot of stock in it. Well, I bought stock when it went down we were thinking of it, and then he announced what he was doing. The stock went down, and we loaded up with it. I mean, we bought close to.
If you're wondering what I was researching there, I was trying to remember the old corporation. They used to supply the cans for when I owned Monster Energy stock back when I was Hanson's Natural Beverage, and I remember now it's called Ball Corporation. Because he was mentioning that Crown one, which I wasn't familiar with, but I was interested to see this Ball Corporation. So the Ball's right around the same as that Crown. That was up like 21% in the past 5 years, if I recall. This one's up 22%. Difference is Ball's obviously profitable, whereas that Crown one looked like they were losing money and trading at a much lower price-to-sales ratio there. Ball also looks about twice the size as far as market cap goes. Ball, I always remember being a very well-run company, let's put it that way.
Remember exactly 15 million shares, which is a fair amount to get when it was in the 30s. And I look at it two ways. I believe that he was going to do the deal. And if he did the deal, that's great. Because I do believe we go to corporate governance now. And one of the major problems in this country, and I keep saying it, not the only problem, because you need discipline as far as inflation goes. And we have that real problem. But one of the major problems is there's no corporate governance. I mean, corporate governance in this country is an oxymoron. Corporate democracy is an oxymoron. And there's an article today about
Carl Icahn talks like so much of a corporate raider vibes it just spews out of Carl Icahn. And I'm not saying it's wrong. Actually, I agree with a lot of his stance. I think he maybe takes things to the extreme sometimes. But if you know anything about the corporate raider type guys, that's Carl Icahn to the T. You look that up back in the 80s. Watch a movie like Wall Street and whatnot. You kind of find out about those guys. It was a different era.
BlackRock talking about it, and I hope. My thing, and I know him, really does something, because actually these index funds protect bad CEOs or CEOs that are just there. And you don't have any accountability in corporate America. And in Twitter, I think it's sort of ludicrous that, I mean, I'm not going to get into the politics of whether or not you should have the right to censor somebody or not. Although I think you really shouldn't censor anybody unless there's a real reason for it. But what's ludicrous is that a couple of people at Twitter who are employees of Twitter, they work for the shareholders, decide in their great wisdom who can go on the platform and who can't. And I think those days are over. That's just ludicrous. So I just looked at it and felt that I got a lot of calls about it. And so I said to myself, I'm buying stock here. If for some reason Musk doesn't do it, we'll probably launch a proxy fight. But what happened was Musk came in, and I said to myself, I said to my guys, I mean, he's the perfect guy for this. And I would, obviously have supported anything he did. I think he's, I don't know him, but I think some of the things he says and does, I think are brilliant. I mean, I'm not in Tesla, but I never own Tesla because, to me, it's not my kind of stock. It's just too high a multiple. But so we went in and bought all that stock, and, we made a lot of money on it. But I'm happy about that. There's something inside of me. I wish I was looking forward to doing a fight on that one. Because it's so.
If you make a man a lot of money, I'm telling you, man, they love you. Carl Icahn sounds like he's loving Elon Musk nowadays, man. It made him a lot of money on that Twitter deal.
It's so outrageous. In other words, I'll just repeat again. Why, if you owned a chain of restaurants, if you owned it, Steve, your family gave you a chain of restaurant, and you have a major domo at the restaurant, would you allow him to say, I don't like that guy, he can't come into the restaurant, and I'll let that guy come in? You say, I'm going to fire you. I mean, so that to me, it just was a ludicrous situation. And I'm not deciding here or discussing the political aspects of whether or not you should have censorship. But I do believe that there is freedom of speech, which is extremely important. And there should be some censorship in certain cases. But it shouldn't be up to the employee of the company, whether he's called CEO or whatever he's called, to decide, I don't like that guy's politics, I'm not letting him on. So I was ready to get outraged, to get into it, but what the heck? I'm glad we made all the money we made on it.
Yeah,
it's a sticky situation because at the same time, he just gave that restaurant example. You go into any restaurant, they reserve the right to refuse service to you if they don't want to, right? That's their decision. And so, I mean, I don't know. That's kind of a strange example he gave there. I get the point he's trying to make, but at the same time, and also that's where you get in the sticky situation. It's like, well, what is okay and what isn't okay? That's when you get into all these areas, and then you get into the gray areas, and then there's some stuff that's so outrageous. It's like, okay, this is for sure, but what about those gray areas where it's like, okay, this is kind of not okay, but is it kind of not okay enough where we can keep it up or take it down or block them? That's where you get in those sticky situations, right?
How much do you make on that trade?
Well, I can tell you it's public anyway. We made about $250 million, 200 million, maybe 250.
Hey, anybody makes me 250 mil out there, I'll love you too, okay? I'm going to love you too.
Yeah, but we have a big portfolio.
Carl Icahn, man, he's talking up Elon Musk's game. You made him a whole bunch of money.
An IEP this year is doing very well because, I've been smart or lucky in our short positions are working out and the long positions are sort of working out. So the net asset value of IEP has gone up so far for the 9 months, over $1 billion. So every year we try to keep ourselves long and short and look for those little jewels. And that's what we do over there.
Yeah. I got to ask with Twitter. I mean, you bought a lot of stock and then you kept on buying. And when Musk was going back and forth, will he buy? Will he not? The media was. There was a lot of people thought it would go through. A lot of people thought it wouldn't go through. It seemed like almost a coin toss. But you were confident the whole way. I'd love to get into your thinking there, where it's like I'm going to buy and keep on buying, and your gut said that it was going to go through. Is it you've seen this so many times, or?
You have to understand something. I think that the company itself is a great platform for this country, a great platform. And you look around at some of these other technology companies in that same area, I don't think they're that well run. So I look at it, I think Musk from the little I've seen what he's done, he's a perfect guy to run it. He's a brilliant guy and all that. So I figured he's going to do it. It's perfect for him. And all this bull that he didn't have the money to do it is nonsense. If you look at his net worth, you look at his balance sheet, and you look at all the stock he's got, I mean, that was just completely nonsense. So, in my mind, anyway. And in my mind, though, throughout this whole thing, he did pay a little too much for it. But not as bad as people say. I really think that company, because of what it stands for, is worth in the low 30s, maybe. So maybe he did pay a little more, today, but so maybe he paid a little more. But that's a sort of a rounding error for the guy. And so I figure, he's going to do it. But if he didn't, I was definitely going to launch a proxy fight. Well, not
a rounding error, he said. A rounding error. Isn't that like a $10 billion difference? Because he's saying it should have been worth in the low 30s, I believe he said. And I think, didn't Elon pay $44 billion for Twitter, if I recall? Let me know if I'm correct on that. So like a $10 billion, $12 billion difference. Jeez.
But close to it. I mean, it wasn't definite. And I would have asked him to be on the board or be chairman or something.
Yeah, it's like who would be your CEO of Twitter if it wasn't Elon?
They didn't call me because it's not my kind of thing. But if he had called me, I would have put $1 billion in that, with him, because I think he's going to do real well with it. But I probably would have wanted a preferred or something, But nobody ever called me, and I'm glad they didn't. So that's basically that one.
That works. You mentioned you always have longs and shorts. You're always hedged. Could you give us a new long position and a new short position, or what would you pick right now? What are you looking at?
Well, if I told you, like, to me, I really because of our positions here, it's difficult for me to buy any more of it, but we own so much of it. The CVI, I think, is going to be. There's things at CVI like that, like the stuff that we're going to be doing in the fertilizer business, for instance. I mean, so that's a good one.
If you aren't aware of like the type of companies Carl Icahn's involved with and owns, usually extremely boring companies, but they are the type of companies that have been very favored in the market for the past year. While Amazon and Google and Meta and you know Tesla and everything else has gotten thrown out for the past year, the sorts of companies that have done very well are fertilizer companies, oil and gas companies. These are right up Carl Icahn's alley. These are a lot of the stocks or wholly owned companies they own essentially. And so he's actually been in a pretty good spot for the past year, to be quite frank. And he obviously, he stays, you know, relatively short in the market as well. So I'm sure he's made quite a bit of money on short positions as well. So Carl Icahn's usually a guy that isn't in favor, right? Because most of the years the market's in a bull market. Most years people are all into the tech stocks. That's where investor money's going. It's the high growth stocks, and that's where Carl Icahn doesn't touch those sorts of things. I mean, Twitter is a reach for him, and I think all of us watching this know, like, Twitter is like the least exciting tech stock maybe in the world. Certainly it was, right? And so, you know, for him to be in that is like him taking a risk, right? But yeah, that's just important to kind of understand how he positions his portfolio and whatnot.
Other ones I can't talk about at all because, you know, the earnings aren't out and whatever that I think are cheap. I think Crown Company is really cheap in the sense that it's in an industry that is not going to be affected that badly, in my opinion. I mean, short term, nobody can talk about it. But long term, it's not going to be affected that badly in a recession. And in fact, it's growing. So you have a company that's growing, and it's hard to compete with.
Yeah, he brings up a great point there. And I wouldn't be surprised if they get massively more profitable in a recession because maybe the price of aluminum and other raw materials that go into their production gets cheaper in that sort of environment, right? So yeah, I actually wouldn't be surprised at all if they actually get far more profitable and that stock actually does well in a recessionary scenario.
I want to, because, you know, you can't just go and build a can company. You have to be in an area because, you know, when you ship these cans, you have a problem of paying for shipping because, you know, can takes up a lot of space. So you have to be pretty near a large user of those cans. So it's hard to break in it. So it's barriers of entrance, natural barriers of entrance, which I like.
Well, not just that, Carl Icahn. It's no one nowadays wants to start a can company. Nowadays, you know, people want to start an online business. People want to start an app, a website, you know, whatever. That's what people want to do nowadays. So, yeah, I mean, can business, I think, you know, it's just the type of thing that people are like, oh, let me go start a business. Oh, a can company. That's what we're going to start. Like, no.
So you just look for that kernel. And then the other...
So I'm sure them and Ball have a somewhat monopoly stake, and maybe there's like a third player in that market.
Thing is, so the thing, I think, but that's going to be down the road, I think, but I think they should stick to their business. That's what I think, and not be diversifying all over.
Gotcha. You know, sorry, unfortunately we're almost out of time, and this has been a big day. We talked a lot about a lot of scary things on the horizon, things to be worried about, whether it's geopolitical, whether it's inflation, stock market. You've been shaking things up for decades. You've seen it all. You've heard it all. Could you share any wisdom or advice to the room before we go have a cocktail? It could be about life. It could be about investing. It could be about running a company. What do you got?
Well, I would just say that it's really funny. When I was in college as a freshman, I didn't know much about the market at all. I was always a little intrigued by it. I went out. I just was thinking back on this, and it really happened. I got into Princeton. And I was, you know, I came from middle class background from a sort of bad high school. But I made friends with a couple of the wealthier guys, and as a freshman. And one of them invited me to dinner with his father. His father came up to see him. And his father was a big deal on Wall Street. Sort of very well thought of. Really very respected. And we were sitting there, and he looked at me and said, you have some promise, the business, because I asked him a couple of questions about, Wall Street a little bit. And he says, one thing I'm going to give you, one bit of advice. Just remember this. Hey, remember this kid. He's a nice guy. Remember this kid. If you ever get into Wall Street and this business, follow one rule. And I'm not joking. This is what he said. Never fight the Fed. And I've learned that. So I will tell them my advice is this Fed and Powell, I listen to him. And he's a serious guy. And he's going to be, there's none of this stuff, all these guys are saying, oh, they're going to pivot and they should pivot and this and that. And, these guys that tell you that a lot of them are telling you that because they put all these people into these companies that are overpriced. And there are many good companies now, but many overpriced ones. And I am happy that Powell really means business. And I really think he does, because you must get rid of this inflation. And that's the worst thing an economy can have. And I think he means business. And I really respected him for coming out and saying it. And I hope I'm right. And I think there's going to be, look, I've said it a few times. I think.
Let me just pause it before he goes on there. The whole fight the Fed thing. I mean, shoot, it hits me hard because I've been fighting the Fed all year. I think everybody that's been buying this year, we're all fighting the Fed. And dang, it's a harder opponent than I thought it was. Dang, Fed's a real deal Holyfield. I saw a video, I think it was on Instagram Reels yesterday, and it was a guy, and he was surfing this wave. It was like, I don't know, an 80-foot wave. It was insane, or 100 feet, I have no clue. It was like ridiculous how big this wave was. And that's what it feels like fighting the Fed this year. It's like, dang, this opponent is tough. NASDAQ down 37%. It's tough to make money. Even if you believe you were getting into the best companies and you were buying them at ridiculously low prices, fighting this Fed is no joke. It is no joke. And unfortunately, for a lot of us, it's a hard lesson to learn. It really is, including myself. It's a hard lesson to learn. We've been bruised and battered and beaten up. That's all I'll say about that.
It's going to get a lot worse before it gets better, perhaps. But all these people that are telling you he should pivot, you know what it is? It's like telling a drug addict. Let's say your kid's a drug addict and telling him, okay, you took enough, you stopped drinking enough now. Okay, go have a good time again. Well, you can't do that, right? You have to get rid of the goddamn problem you got. And that's what we need to do here. And don't fool yourself. There's going to be a lot more headaches, I think, before we get out of this mess we're in, because you can't have the Fed, even if they want to. Over the last 20 or 30 years, the Fed was able to come in and save you and save the market, or they go into this taper tantrum. But they can't do it now, because right now, even if they wanted to, you can't keep printing up money, because it's going to just throw gasoline on the flames of inflation. So I think this is what you got to understand. However, there's some very good companies out there, and and if you're willing to buy them, and have the patience, I think you'll look back at 5 years or something, or less than 4 years, and see that they were great buys. But right now, I think they're very far and few between.
Well, this is great, Carl. Thank you.
So, that's the hardest thing. By the way, I appreciate Carl Icahn coming out of his cave and doing a video for us there. That was good stuff. That's the hardest thing for us long-term investors is somebody like myself to look at a stock and see that it's massively discounted and being extremely confident that the stock's going to 2x, 3x, 5x, 10x over the next, let's say, 5 years, right? And to say, I'm not going to buy it because the Feds continue to raise interest rates, so therefore I can't buy it. That's a tough decision for us to make. It really is. And unfortunately, it would have been the best thing, right? We should have all said, hey, Fed's raising rates regardless of any stock price. We're not buying. it would have been the smartest idea, because every stock has just gone lower and lower and lower basically this entire year, right? Some stocks at bottom, Netflix, and a stock like I own, Elf, thank goodness, that's probably my only stock that's done amazing this year is Elf on a Shelf. I think it was up another 15% or so in the past day or two. So, but those stocks are like 1 out of like 100. And everything else has just gone down and down and down. And you're like, it can't go any lower. This has to be the lowest. And it goes lower. And it's like, seriously, dude? Like, when do stocks stop going down? So, the fight the Fed thing, man. Jeez. Yeah, I really get it now. I really get it. Because that opponent is no joke. And the thing with the whole fight the Fed is this has been a knockout year, because the Fed's been so insanely aggressive, the most aggressive we've seen them in modern history, to be honest, in any time in the past number of years. And so it's been an exceptionally hard fight. It's like if they just raised, a few times this year, 25 basis points, 50 basis points, it wouldn't have been that tough of a fight. But when you talk about 75 basis points, 75 basis points, 75 basis points, 75 basis points, and it's just time after time, it's like boom, boom, boom. It's like holy smokes, man, we can't take it anymore. I appreciate each and every one of you that have subscribed to the channel. Thanks for being here. 18,300 plus subscribe. I literally can't say the word anymore. You know what it is, okay? I appreciate you. Much love as always, and have a great day.